There's a housing crisis in Australia and we're not even talking about it. I'm really bullish on property. I'm a property investor, I'm a buyer's agent, so I help clients invest into property, but I'm not going to hide away from the fact that we have an issue here. And in this video, I want to explain to you what that issue is, how do we best prepare for it, and what does the market look like as a whole in the next 3 to 5 years. If you're interested, keep watching. Hey guys, my name's Ravi Sharma and welcome back to the channel Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button and drop me a thumbs up for the video so we can share these videos out to more people that really need it. Now in this video, I really want to talk to you about what my thoughts are on the housing crisis, and without sounding so dramatic here, I really think that we are headed to an apex where there's a decision that's going to have to be made, whether that's through the RBA and through the interest rates, whether it's APRA and coming in with lending restrictions, or something else. So as we know, media headlines love a good clickbait title. However, in this video, we're just going to break down this article on Yahoo Finance, and I'll share with you what my thoughts are as we break this down. Triple crisis, meteoric house price rises risk devastating Aussie economy. Australia's skyrocketing house prices are widening the chasm in wealth and income inequality, which remains threatened to destabilise the national economic recovery, according to the panel of experts who are calling for a royal commission into the issue. According to the new report, UNSW's City Futures Research Centre, which consulted a panel of 87 economists and housing experts, not sure why they didn't ask me, maybe I'm just some random guy on YouTube talking. This gap is widening due to the country's fragmented approach to housing policy. Policymakers grasp at different pieces of policy impacting housing, including tax policy, monetary policy, macro-prudential policy, housing, infrastructure, planning, and other sector actions, but never grasp the whole system, the report said. Look, I have to agree here. I think what we're doing is we are leading down one path, where we've got, and I've explained this before, is wealth effect, okay? We're basically going, let's reduce the cost of borrowing, and in effect, people are going to use the extra access to debt to go and purchase things like housing. Now, with all the incentives the government's pushing through housing, house prices go up. Now, if you already own a house, you're now house proud and the wealth effect really kicks in for you. So you can see across the street someone else's house going up in value. That means your house has gone up in value and now you can spend on other things. Now, whether that's going and repeating the process, so buying another property because you said, hey, well, you know what? I did this 5 years ago and it really worked out well for me. Let's just do it again because, hey, we'll buy in the same location, expect the same results. What could go wrong? So we do that. And that turns into a bit of a wealth effect where there's more demand coming into an area relative to the supply that's available. And all in an attempt to do one thing, recover from the pandemic, right? Basically, our GDP and economic growth just got smashed during 2020 with all the lockdowns. So they thought, hey, maybe it's a good idea. We just give our debt to everyone else, and this is modern monetary policy, and everyone can go out there and borrow funds. So what could possibly go wrong? Let's have a look. More than 2/3 of experts panel agreed the absence of a coherent housing market strategy for Australia now constitutes a significant barrier to structural adjustment in the economy and to an effective post-pandemic recovery. The UNSW researchers also took aim at the Reserve Bank, which they said were flying in the face of advice from other central banks and taking an approach to rising house prices in the belief that would be beneficial for economic growth. The view has no validity if the longer-term evolution of the economy and the housing market is the concern. Now, as much as I'm bullish and I benefit heavily from the housing market increasing in value because I have real estate and I have debt, I still think, in 2020, we should have had some sort of correction. It was the mid-cycle slowdown. Yes, we did see prices calm down from 2017, 2018 through to 2020, but now we are in a proper property boom. And irrespective of what people say, they don't like the term. 12 months ago, I was saying it on the channel that we're heading to the biggest national property boom we've ever seen. Now we are in it with realizing there's a problem with this. And we're going to find out who gets the benefit of it. And unfortunately, it's not going to be something that you may want to hear or may not want to hear. But it's interesting to look at because as much as I'm bullish on it, I still like to have an economy growing sustainably with the right things being attended to. So instead of just going, hey, let's prop up houses, why not use that money to then go into, say, something more productive, optimize things like our manufacturing. And I think that has a sustainable result long-term for Australia. But hey, I don't make the policies. For the economy, these trends reflect a triple crisis where housing price outcomes outdo income and wealth inequalities, contributed to economic and financial instability, and often unrecognized diminished productivity and growth. So look, I agree with these guys. I think there is a crisis. I think that we are heading towards a major crisis. And this is why I say that in the next 3 to 5 years, the people that are really trying to adjust their portfolios, trying to get into the property market, it may not be the traditional way. A lot of our parents grew up going, well, let's just buy a house, pay it off for 30 years, and that's where we're going to live. But unfortunately, it doesn't work here. We've got income that basically doesn't grow. You've got inflation that they aren't reporting on and is actually through the roof. And you've got asset price inflation where properties in general were supposed to grow by like 4 or 5%, right? Maybe 7%. You're seeing areas grow 15, 18, 25, 26% in a year. That's not normal, okay? And so what that does is it puts a lot of pressure onto young people. And at the end of the day, if I'm looking to buy a house, if I don't have existing investment portfolios and I'm starting out fresh, there is no way I'm going to be able to keep up with the market out there. At the end of the day, the way the policy is it really helps property investors. Now, there are some really good benefits of having more property investors because they actually help, develop properties. They help upgrade certain properties so that people can afford to live in them, right? But at the end of the day, we are having an issue with supply and demand. If there is more demand than supply, which is what we are clearly seeing, we are going to see price growth. Now, whether I like it or whether you like it, it's not really the case because now we're getting emotionally involved. At the end of the day, all we need to do is look at the numbers, look at what is happening and why are they not wanting to change things. The RBA's come out and they've said, hey, we're not going to increase cash rates for the next couple of years. But as a result, you've had some of these big four banks come out and say, well, 3 years from now, we don't want to be offering a 1.89 or 1.9% interest rate. They've started increasing their 3 and 4 year fixed rates, which is completely fine, it's normal. But what I think is going to happen is for the next couple of years, the story isn't going to change. We are going to see the same thing happen for the next couple of years. Every year that goes by, the risk versus reward doesn't really make sense. And that's why starting earlier is actually a huge benefit because you're getting in at prices which you think right now are crazy. Look in the next 12 to 24 months. I said the same thing 12 months ago and I said, guys, get into property. I know everyone's scared, but if you've got a job, you can get a mortgage. Why aren't you buying property? Of course, none of it's financial advice. It was more a prompt for you to start getting educated and getting comfortable with taking action. No action right now is still an action. You're actively taking an attempt not to go with the market, thinking that your emotional beliefs are holding you back. And so ultimately, you get left behind because you hope the market calms down. You've got to look at the facts and figures and you've got to see what is it that's going to really cause this market to collapse. What is it? We've seen APRA basically put up their hands and say, we're not getting involved. RBA said we're not getting involved for the next couple of years. If we can use housing to actually result Australia coming out into a strong economic position and the growth numbers look great, well, that's the decision they're going to make and they're going to go with that. But it's not about you going, oh, well, I want to change policy. I'm going to write a petition. Oh, I'm going to, go into the comments of this video and say, look, people shouldn't buy properties. At the end of the day, they don't do anything, right? So instead of complaining, we need action. We need action based on numbers, logic, that makes sense, right? We are going to see for the next couple of years, this gap widening between the rich and the poor, right? At the end of the day, let's call it what it is. The low income earners are going to get left behind because the income growth doesn't exist. The people up the top, they get access to cheap debt, which they can use because their income's higher. They then use that to then compound their growth by going into investment properties and they keep repeating the process. So if you're sitting here or even in the middle somewhere, you're basically letting the market dictate what you can do. This is the same thing that people that are sitting on the sidelines going, well, that's okay, I don't need to worry about, super and retirement, that's like 40 years away, that's okay. Well, when you get to 65, do you really have any choice? When you're 40 and you've got kids and now you want to take them to school, do you have choice? No, you don't. So stop getting emotional about the little things that you can't control. And in this case, it's quite significant. I think we're headed into a crisis, but I think we're just kicking the can down the road where you're going to have to deal with this in 3, 5, 6, 7 years. And for me, I think it's important to just reestablish and restructure the way my debt is, the way that I want to look at assets and what type of asset classes I want to be in. And for me, based on what I'm seeing here, based on what APRA and the RBA are coming out and saying, you can't go wrong with property, at least for the immediate short term. Guys, if you enjoy content like this, definitely smash the subscribe button. Share this video with someone else that you think is getting a bit too emotional about what's happening in the real estate market. And of course, like the video so we can share this video out to the more people on YouTube. I'll catch you guys in the next video. Thanks, guys.